Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. It is the final countdown. Donald Trump and Kamala Harris are in Pennsylvania on the last day of campaigning for a presidential election that's on track to be one of the closest ever. Asian stocks climb on positive China sentiment, but futures are flat ahead of this U.S. election. Plus, Adnoc's new plan to use artificial intelligence to make the energy industry more efficient. We are live at Abu Dhabi's Adipec with the latest energy news. It is just gone 8 a.m. across the Emirates. I'm Joanna Versace in Abu Dhabi today. We are coming to you live from Adipec. I've been traveling a lot in the last couple of weeks, but today we are in Adipec for the world's largest energy conference. So much to talk through. But of course, the focus for markets is going to be on one thing only today, and that is those U.S. elections. I've got to say, though, price action into today is pretty muted, despite everything that we've been talking about, all of the potential drivers for markets into and out of the elections. Perhaps it's the calm before the storm, or at least the calm before the event. As you can see on screens in front of you, S&P futures not doing that much. We're leaning towards the green, about 5 basis points or so. A bit of a negative close yesterday. 10-year yields also inching higher, as they have been over the course of the last couple of weeks, sitting just shy of 4.30. And the USD, interesting price action, even though for the most part of the last few months we have been steadily climbing. The last few days, actually, the story has been one of dollar weakness, namely that has been tracking some of the later polls that came out over the weekend, suggesting that Harris may have a slight advantage over Trump. Many people had been playing a stronger USD trade as a Trump trade into these U.S. elections. So keep an eye on the USD into these elections overnight as well, and how it reacts afterwards. Brent obviously very much in focus yesterday too, sitting at around $75. Today not doing much, but we have climbed about 5% over the last couple of trading sessions. A couple of factors that we talk about. Number one, geopolitical concerns getting priced back into the market again, with Iran talking about a potential reprisal to that Israel missile attack from a week ago. In addition to the decision out of OPEC Plus late Sunday evening to push back the decision to put extra barrels to the market in December. They pushed it back by 1 month. So both of those factors have given the oil complex a bit of a boost. But obviously we're here at Adipec and we're going to talk about some of the longer term drivers as well. All right, our terminal chart today, because it is U.S. elections, I thought this was interesting. A poll was conducted amongst the U.S. public, asking them about which party they think will do a better job on the economy. So red obviously is Republican, blue is Democrat. And you can see just over the last couple of years, the public's perception is that Republicans will do a better job on the U.S. economy than Democrats, which is interesting, of course, because the U.S. economy has been relatively resilient in a world where many other economies are struggling. It just hasn't translated into the public's perception of how politicians are doing. Okay, let's also check in on how markets are in Asia are faring. Avril Hong, as ever, is in our Singapore studio. Avril, just give us a sense for how some of these Asian markets are faring into the U.S. elections. Is there nervousness?
Well, if you look at Chinese equities, there isn't that bit of nervousness. We're seeing the CSI 300 2% higher. It is against the backdrop of a slew of positive headlines coming out from China. Whether you're talking about services activity based on a private survey, there's improvement there. Chinese Premier talking about ample policy room. And then, of course, the top legislators meeting this week also seem to be considering a proposal that will help local governments to ease their financial burden. So this is what you're seeing, the outperformance in Chinese equities. The offshore yuan is holding flat against the greenback, but of course, just a day ago, we did see that climb amid the unwind of the so-called Trump trade. Keeping an eye on the Aussie dollar as well, we saw an initial spike after the RBA left things on hold. This was as expected, but it did talk about the need to be vigilant about upside inflation risk. Though this is not something new, it didn't give away very much in the way of guidance. So we're going to turn our attention to the press later this hour, Jumana.
Yeah, excellent. Avril, thank you so much for the overview, and also just encapsulates that in some parts of the world, including Australia and Brazil, there are upside surprises to inflation still. So bear that in mind. Okay, back to U.S. elections. Donald Trump and Kamala Harris are sweeping across the swing state of Pennsylvania on a final day of campaigning for a presidential election that is on track to be one of the closest ever. So for more on this, Bloomberg's Vonnie Quinn joins us now. Vonnie, good to see you. Maybe just give us a sense of what were the closing messages for both of the candidates into the very last day of campaigning?
Yes, we have less than an hour to go before it's election day, actually, Jumana, and both candidates are still campaigning and will be into the wee hours of the morning. So in terms of messages, really from the Trump side of things, pretty negative, making the argument that the outcome may not be fair, so potentially setting us up for some kind of challenge should the former president not win. He said, for example, about North Carolina is reliable for me. I mean, I've never lost, and I don't think we're going to start now. For her part, Kamala Harris didn't mention Trump at all. She concentrated on positivity, on unity, on getting everybody out to the vote, because this really will come down to very, very small numbers of votes, probably in the thousands, perhaps even in the hundreds.
Yeah. Always seems to be the case with these U.S. elections. And Vonnie, one other question, technical one. When can we expect to know the result? In prior times, in some cases, it's taken a couple of days for the result to become apparent. So what are we expecting this time around?
Well, the true answer, Joanna, is really as anyone's guess right now. For some of the safer states, some of the states that will likely go blue or red that we know already, that's likely to happen very quickly. But for those states in which there are 93 electoral votes up for grabs, so those 7 swing states, it could take a little while longer. So, for example, Pennsylvania may have to go to a recount, something like Arizona the same. If the numbers are very, very close and margins are tight enough, we might see the same thing happening in places like North Carolina, which doesn't even start to count mail-in votes until 5 p.m. on election day itself. Last time around, we had clarity on the Saturday, so we'll have to see how long it's going to take this time around.
Yeah, no, I do remember that Saturday very vividly. I can't believe it was only 4 years ago. Bloomberg's Vonnie Quinn in Washington, thank you so much for the overview. I'm really happy to say now that we're bringing in our first guest, very special guest over here at Adipec, Dan Yergin, the S&P Global Vice Chairman. Great to have you with us. So much to talk about in the world of energy. But first, I'm going to talk about the U.S. elections and the potential impact it could have on energy. You penned an article in the Wall Street Journal a few days ago talking about how there has been discussion about a potential ban on fracking in the U.S. Now, even though the Vice President Kamala Harris has sort of dialed back some of that commentary in the last couple of months, fracking, the shale industry has completely transformed the U.S. energy landscape. So why would it be such a concern, do you think, if the fracking ban is introduced again?
It's still a fraction, an important part of the American political system that talks about banning fracking. And the point is, it would be ridiculous because over 75% of U.S. oil is fracked, is shale, 85% of natural gas. And there are like 280 million cars, 98% run on oil products. So the U.S. would be back importing 10 million barrels of oil or some number like that. Yeah. So it was really, the point of the article was just to bring some reality to a continuing discussion. And of course, the other thing is the growth of U.S. production has transformed the global market. U.S. is 13.5 million barrels a day.
So I was going to say that when you've got the likes of former President Trump saying drill, baby, drill, I mean, is there potential to drill even further? We're sitting at 13.5 million. How much production could the U.S. actually come out with?
What we've seen is that millions of barrels were added under Donald Trump and millions of barrels of new production were added under Joe Biden. I think the consensus now, if you go around in the industry, is that maybe the U.S. could get up to around 15 million barrels a day and plateau, which is incredible, would be 3 times what it was producing in 2008.
Let me ask you a question about what could happen. This is hypothetical, and in return, I'm going to ask you who you think is going to win, because nobody knows at this point, but under a return of former President Trump, I'm hearing 2 arguments. Short term, could be bullish for oil because it might mean a more hawkish stance towards Iran, further implementation of sanctions, or at least effective implementation of sanctions. That's short run. Medium term, if he starts applying tariffs to countries all around the world, that would be bad for the demand outlook and therefore a negative driver for oil. Where do you stand on that debate?
I think it's true that the sanctions really aren't in place on Iranian oil. And so Iran, in fact, is just talking about adding another 250,000 barrels a day. There's no question the Trump administration would come back with very tight restrictions on Iran. In terms of tariffs, you worry that if you go back to tariffs, take you back to the 1930s where you have retaliation going on. It built in, I think, the risk is inflation on the one side and the other a slowing global economy. So, we've gotten used over 30 years to an open global economy with a lot of growth. Yeah. And it would really change the boundaries of the global economy.
Yeah. Let's go back to what you were saying about supply and the huge amount of supply increase that we've seen out of the U.S., 13.5 million in now, but it's not just the U.S. You're seeing extra supply come through from non-OPEC countries, Brazil, Guyana. Guyana is one of the new ones to come to market. Do you think that is one of the factors driving the decision making at OPEC Plus here?
Absolutely.
Because they're incapable of putting back extra barrels to the market without causing the price of oil to drop.
There are two things. One is the growth of supply, and right now the Western Hemisphere is producing more oil in the Middle East for the growth reasons you say. Not only the U.S., and there's another country everybody forgets, which is the 5th largest producer of oil in the world, which is Canada, and its production's going up. But the other thing that's really dominating, I think, is the weakness in China. And we're going to see the markets, we see the price responding. Is there going to be more stimulus in China? Chinese economy, is it going to get growing more, even though the number of electric cars is growing? Because China has been such an engine of growth in demand for 2 decades for oil. So that's the critical question right now.
What do you think happens to OPEC Plus? Should we start to get worried about cohesion within the group? Because many members want to start increasing their market share. They're losing market share right now.
Well, I think it's the perennial discussion about market share. I think so far they've actually held together pretty well because they realize that the trade-off would be a lot lower prices. So, I mean, we've seen now they're postponed for a month bringing back more oil. They're very attentive to the market. But I think the incentives to maintain that cohesion of OPEC Plus are still there.
Yeah. More medium term, OPEC tend to be slightly more optimistic on the demand outlook than other think tanks out there. And I thought it was interesting. I was just looking at a chart into Adipec to frame the discussions. But OPEC see oil demand increasing by 18% all the way up to 2050. The likes of IEA see peak oil, in a few years' time, perhaps, in the next couple of years. Other, even oil companies see that happening around 2030. But after that, do you have a view on when we're going to see peak oil demand? Yeah, I do. And it's
really what I wrote in the new map, which was my latest book, which is that probably around 2030, early 2030s, probably that's when we see world oil demand peaking, but it doesn't decline. It's more of a sort of plateauish. Yes. So sort of somewhere in the middle between those two. But it's a stark choice between OPEC and the IEA in terms of demand. Two very different views of the world.
Yeah. Just to round up the discussion, because it has become a massive theme here as well. AI. I thought it was really interesting that in the opening ceremony yesterday, Dr. Sultan Al-Jaber was talking about the mega trends driving energy markets. He talked about the global south. He talked about the transformation of the energy grid. But then the third element was AI, data centers, and the sheer amount of energy consumption that's going to come from all these data centers. Do you see it as a game changer?
Yeah, we had a seminar on Sunday where these themes were there with Dr. Sultan and really about 60 CEOs from around the world. And there's no question between last year and this year, there's this kind of electric shock about the need for additional electricity, which was not really on the agenda. People weren't thinking about it before. Now there are. And, it's possible in our numbers that by 2030, which is 5 years away, somewhere between 7 and 10% of U.S. electricity demand will be data centers. And of course, the UAE is very keen to make this a center for data centers, and they have something going for them, which is inexpensive electricity, including their nuclear power plants.
So ultimately, does that push the electrification drive then? The amount of energy that data centers are going to consume?
Yes, absolutely. Yeah. And how to meet that now has become a challenge. And I would say that's why some people almost are in shock about it, because it's not been accustomed in like the US or Europe to growth in electricity demand, and now looking at it and saying, how do we do it?
Very good place to leave it. Dan, real pleasure to chat to you. Thank you so much. That was Dan Yergin, S&P Global Vice Chairman here at Adipec. Well, coming up, Adnoc says it will be turning to AI to help to make the energy industry more efficient, as we were just talking about. More on what the oil giant has planned next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Abu Dhabi today. Abu Dhabi's main oil company says it will use artificial intelligence to analyze data and identify operational improvements in the energy industry. Adnoc CEO told the Adipec conference that the agentic AI technology developed by AIQ in collaboration with Microsoft and G42 will speed up seismic surveys, increase production forecast accuracy, and reduce emissions.
and today, working in partnership with AIQ, G42, and Microsoft, I am pleased to announce a new transformative solution in our AI journey: energy to the power of AI.
Bloomberg's Middle East energy reporter Anthony Tapalo joins us now on the ground. Anthony, it's been a busy already just one day of Adipec. The opening ceremony is always interesting because it sort of sets the tone of what the major themes are going to be. Interesting, I was just talking about it also with Dan Yergin, that AI has become such a major theme this year for the energy market.
Yeah, good morning, Jemana. It was a busy day, and it is interesting that AI is kind of the topic. We were here a year ago in the run-up to the COP28 in Dubai, and so the theme was sustainability and climate. Now we've got the theme as AI, but as we discussed yesterday on the show, the undercurrent running through that is all oil and oil production. So oil is really back in force today. We saw a lot of energy CEOs talking about how they don't see peak oil coming up anytime soon. They see it still down the future. Energy demand is continuing to rise, and they are looking at AI as a way of kind of harnessing that as a tool to improve the efficiency, to improve production. It was the BP CEO on one of the panels yesterday that was talking about AI being able to do thousands of well plans in just, I think it was a matter of months, he said, versus engineers doing it. It would take them years to do something like that. So really speeding up the process of planning out the wells, planning out the drilling. And Dr. Sultan was also talking about issues about efficiency, decreasing emissions as well. So we've still got that kind of that through line of sustainability in the industry, as well as that efficiency and the AI. So they're really bringing those pieces together and trying to make the industry more productive, more efficient and cleaner, so that oil can continue to be used. Because again, that's really the bottom line. They want to get the oil out of the ground and get it sold and keep using it for decades to come.
Yeah. Can I just ask you, to what extent, again, are geopolitics sort of overshadowing some of the discussions here?
Geopolitics did come up yesterday, and we saw different reactions from the CEOs yesterday. So it was some of the CEOs saying that China is one of the biggest concerns. The BP CEO saying that the Middle East tension here, the potential for a wider war is his biggest concern. The Shell CEO saying that it was a competition with China, potential for fallout on the wider economy, the wider market. The NE CEO gave kind of a more humane, less business answer. He said, look, these are business risks. We'll deal with them as a business. I'm worried about my people. Right. A lot of the people did mention that they were worried about the staff here as well, too. So those issues really did come up. Again, it was an oil panel, oil CEOs talking about how that's going to impact their business and demand and their ability to sell that oil. So that it really did come up as a factor. And we've got this election coming up today in the United States that's looming over everything. The CEOs were a little bit copacetic about it, saying, look, we're going to do business in the U.S. either way, but for sure it is a concern. They want to see how the wind is going to blow and what's going to happen in terms of those policies. Yeah,
absolutely. U.S. elections obviously in focus for everybody today. Bloomberg's Middle East energy reporter Anthony Tapala, thank you for joining me on the ground. All right, coming up, we are going to be hearing from India's Minister of Petroleum and Natural Gas, Hardeep Singh Puri, on the future of India and the oil market, as well as partnerships with the UAE. That conversation next. You're watching Bloomberg.
There is enough oil in the world today. There is no shortage of crude oil. Today, even with one large economy facing some strain, it's a very large, second largest economy. There are more oil coming in on the market from Brazil, from Canada, from Guyana, from other countries. So I think that plus the global turbulence, I'm not only talking about February 2022, I'm also talking about what's happening closer to where we are sitting. The market is factoring all that in, and the price is still only 70 or so. Now, I'm not wanting to tempt fate. Tomorrow, if there is a large-scale conflagration and things spiral out of control, all bets will be off, and the market and the price could, volatility and price could shoot up. I don't see that happening because more oil is coming on the market, And I think even if you look at how people are planning for the medium long term, prices will remain within a specified range.
Let me ask you a medium-term question. I thought it was really interesting. OPEC are forecasting that India will be the single biggest contributor to oil demand growth in 2050, adding 8 million barrels a day. That's 3 times as much as China.
Not just OPEC.
Are those numbers realistic?
If we sustain, let's say, a growth rate of 7% or so, you're going from a $4 trillion economy today to a $7 trillion economy to a $10 trillion. And our consumption of oil is 3 times higher than the global average. So if there is demand and there is going to be usage, there is a future there.
Does that give you more leverage, bargaining power with some of your suppliers, given India is set to be the largest marginal driver of demand?
That's a sophisticated way of asking, are you using the market card?
Are you?
The answer is yes. Wouldn't you do it? I mean, you have got demand, you've got growth, and you've got more and more suppliers. And if one person is, let's say one entity is being difficult, we turn around to the other one. How would you like it? Therefore, if you look at the Indian shares of 5.5 million barrels a day, their main suppliers earlier used to be 800,000 barrels or 1 million divided between 4 or 5 suppliers. Now it keeps shifting.
Yeah.
And somebody who's close by to India has a geographical advantage in shipping costs and freight costs. They may decide to take advantage.
Well, this conference isn't just about the long term and some of the demands on the energy mix, but also deal making as well. And I'm very curious to hear about the partnerships that Adnoc, Aramco have in place with some of the refiners in India. Some deals were inked in the past, but I'm just curious to hear about the types of discussions that you're having now on refinery projects within India.
No, we had the privilege of hosting the Crown Prince. The Prime Minister had invited him, and a large delegation which came with him. The oil marketing companies had some discussion there. All the oil marketing companies are here now. The private sector is here. I only find out about what deals, as you call them. They're arrangements, technology arrangements, critical minerals, other things. I only find out when they're announced. And even if I knew, I would not talk on the public forum. But it's a very positive partnership. Whereas India is looking at productive assets in the UAE. We have one of our companies has 150 engineers here. We are looking at further investment by them there. So it's a partnership which is significant by today's standards, and it has the potential of growing even more in the coming years.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. It is the final countdown. Donald Trump and Kamala Harris are in Pennsylvania on the last day of campaigning for a presidential election that's on track to be one of the closest ever. Investors slightly in risk-off mode, though markets now leaning towards the green ahead of the U.S. elections. This week's Fed decision also in focus, along with the RBA's decision to pause. Plus, Adnoc's new plan to use artificial intelligence to make the energy industry more efficient. We are live at Abu Dhabi's Adipec with the latest energy news. It has just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Abu Dhabi today, coming to you live from Adipec, which is the world's largest energy conference. So obviously we're talking a lot about oil and some of these big energy themes, in addition to the number one talk of the town here today, and that is those U.S. elections. Taking a look at the market reaction, well, markets aren't doing a lot today. It is the calm before the storm. We've got futures leaning slightly towards the green, as you can see. Again, trading sideways, a bit of a dip yesterday. Some nervousness prevailing. We've got the VIX climbing into the event, so volatility markets penciling in at this uncertain outcome with the two candidates neck and neck at this point. We've got 10-year yields at 4.30, so we're moving slightly higher over the course of the last couple of weeks as well. The USD not doing a lot today either, trading sideways, but yesterday we did see a bit of a dip in the USD as Harris gained some ground versus Trump in those latest polls. And then Brent today stabilizing back at around $75. Of course, we have seen a bit of an upward push the last couple of sessions as the market factors in some of those geopolitical considerations, again, with more hawkish talk coming out of Iran, in addition to the OPEC Plus decision to push back putting extra barrels to the market by 1 month. So all of that has given a bit of a boost to the energy complex. Quick look at our chart today. And this is a poll that was conducted asking the U.S. public who they think, which party is in a better position to handle the U.S. economy. As you can see from the lines there, in the past few years, the public's perception is that Republicans have a better handle of the economy than Democrats. That's that red line overtaking the blue line. So that is just one factor that is going to be obviously a key factor of consideration into these U.S. elections. The state of the U.S. economy is one of the key topics for people on the ground. So bear that in mind as we head into election day in the U.S. But back to where we are right now, because big oil executives are meeting here at Adipec, and they see escalating tensions in the Middle East and U.S. relations with China posing the biggest risk for crude markets. So joining us now is Crystol Energy CEO Carole Nakhle. It's great to have you with us on the show again.
Johanna, thank you very much.
So much to talk about: long-term drivers, short-term drivers. Maybe let's just start with the long-term drivers. I watched the opening ceremony yesterday. Dr. Sultana Jabber highlighting some of the big themes for the industry, including the growth of the global south, emerging markets. He talks about the transformation of the energy grid, but then also the fact that AI is going to be consuming a lot of energy because of the consumption demands out of data centers. You think of all of these things together, and it actually paints quite a robust picture of the medium term for sources of energy demand.
Absolutely. So everybody's talking about digitalization, artificial intelligence as a main factor to accelerate the energy transition. And there is a big element of truth in that, because historically technology has been a main driver of energy transition. Think of the Industrial Revolution, when we moved from traditional biomass to coal, then later the internal combustion engine, electricity, and now digitalization. So AI is a big theme in the energy transition. But we should also look at it from all its facets, not only look at the positive side, but also look at the other side of the coin. That is the energy demand. Now, so far AI is a small consumer of energy compared to other sectors, for instance, and other applications. But as the demand grows exponentially, and we saw this explosion in the use of digitalization accelerated by the COVID pandemic when we all worked from home, add to that AI, we are seeing an exponential growth in the expansion of digital technology. And as a result, this is being accompanied with an increase in energy demand. And we heard like companies such as Amazon and Google, they're even heading into SMRs,
nuclear,
small modular reactors, exactly, to find new sources to meet this growth in demand, in energy demand. So it's not really clear cut. And also think about growth in energy demand also can result in higher carbon emissions. So it's not like really everything going to be a happily ever after.
I mean, look, it's I think Adipec, the oil ministers have been saying this for years, especially the ones in the region, but they're saying that there also hasn't been enough investment going into traditional hydrocarbons. And I believe the number that His Excellency Mazraoui used yesterday was $1.5 trillion still needs to be invested into the power industry. It doesn't seem like enough investment is going in either direction, either in renewables, in the transition energy, but also in hydrocarbons as well. So it looks like we're heading towards a mismatch between supply and demand over the medium term, not short term.
Maybe, but I'm always cautious when people throw at me figures related to investment, how much investment is needed, because you have taken into consideration the nominal values, the inflation factor, the productivity gains, the efficiency gains. I mean, look at shale, for example, in the US, when we used to say, oh, we required X amount of investment, but then because of efficiency gains, you were able to do much more with little investment. So we should take that into consideration, but definitely we still need investment in oil and gas. I have to say that this, to go back to your first question about artificial intelligence, AI is not just for the energy transition, it's being also widely applied in the conventional sector. It's improving the productivity of oil and gas and the efficiency of operations as well. At the same time, we need to see further investment in green energy. We're seeing some, if you want, decalage a little bit with, or a lag with wind energy. Costs are higher, and also you have pressure on metals and minerals available. So not only investment in energy sector, but also in the mining sector. There also we're not seeing the same growth. But I'm not expecting crisis. I always expect markets to adjust, because if prices go up, government provides the right support for investment, then you would see investment coming.
Yeah. Let's go maybe back to the short term. And it feels as though short term, we are looking at a very heavily supplied market. I was just speaking to Dan Yergin, and we were talking about the massive increase in production coming out of the U.S., 13.5 million barrels. That's more than compensated for the production cuts that have come through from OPEC+. OPEC+ seem to be in a difficult position because they're losing market share, but also the price of oil seems to be dropping.
People talk about green energy as a disruptive technology, but I think the bigger disruptive technology has been shale, because it has changed the whole equation of global oil markets. And indeed, many people underestimated the growth of shale, but keeps on surprising us, hitting record levels. And that by itself was not factored in many of the forecasts that we saw published maybe a few years ago. Now, when it comes to OPEC Plus, for this year, they were extremely optimistic, at least OPEC, in their outlook for oil demand. Everybody put great hope on China, but China is suffering from structural problems that are not going to be resolved overnight, and we did not see the major fiscal stimulus from Chinese government as we saw in other places. So the Chinese demand has played a big factor in decelerating oil demand. At the same time, not only outside OPEC, but even look at OPEC Plus, you do have some cheaters, the usual suspects. Iraq continues to overproduce. So even though we have the headline, yes, but I really would like them to delivering on their promises, not being always named and shamed to deliver on those promises. So OPEC itself, even though we talk about headline production cuts, but they are not fully delivered, and more barrels are coming also from Iran despite the sanctions. So that might change actually after the US elections. We have to wait and see.
Yeah, let me just ask you then where you see, I mean, again, you don't have a crystal ball, but where do you see oil prices ending up then, given all of these drivers that we discussed? Because there's so many bearish drivers short term. The only perhaps bullish driver is a geopolitical risk flaring up again.
Yes, or if you have also some pleasant surprises coming from China, or maybe the economy surprises us everywhere, that could be another bullish factor. But really, I don't see that picture changing dramatically from what we have now, putting aside geopolitics, right? Because look, imagine on top of what we currently have, war in the Middle East, war in Ukraine, sanctions everywhere on major producers, and despite the OPEC Plus cuts, we're seeing prices struggling to hit the $80 a barrel. So I don't expect that to change drastically anytime soon, except if there is a massive development on the geopolitical front that we cannot foresee exactly. But even then, even if you have a spike, I don't think we're going to stay in the high territories for too long.
Yeah. Carole, always a pleasure to chat to you. Thank you so much. Carole Nakhle, Crystol Energy CEO over here at Adipec. All right, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio, and I believe we are in the middle of an RBA press conference. So what are we hearing from the RBA right now, Avril?
Absolutely. I mean, we're hearing Governor Bullock speaking, and of course, this is against the backdrop of earlier how the central bank left rates unchanged. This was as expected. What we were really hoping to hear more of is perhaps any guidance towards when we could actually see the RBA easing. But given how it has flagged some of the upside risk to inflation, that gives you a sense of where the RBA see things skewed towards. So we have the likes of Bloomberg Intelligence already talking about how you have to look perhaps under the hood a bit, look at how it has trimmed the underlying inflation forecast and how that perhaps informs you that the RBA at least is creeping even closer to a cut at some point. We're seeing it pretty flat on the Aussie dollar as well as on the ASX 200. It has declined today and hung on to most of those losses even as the governor has spoken. Taking a quick look at what we're seeing the rest of Asia as well, because today we've also been seeing that Chinese stock outperformance amid a slew of positive headlines. Whether you're looking at services activity out of China or the Premier talking about ample policy room, all this positive news that is lifting appetite for Chinese stocks. Overall, Asia looking pretty positive today. Jumana.
Avril, thank you so much. So positive handover from Asian markets as we gear up and into the European session. U.S. futures still trading sideways ahead of those all-important U.S. elections. Well, another big story that we've been following very closely, not just over the last week, but the last couple months, voting has closed for unionized factory workers at Boeing who were deciding whether to accept a contract offer or to extend their strike. So for more, let's bring in Bloomberg's transport reporter, Danny Lee. Danny, once again, we're in the situation where the workers' union are voting on whether to accept the Boeing proposal. What are you watching out for this time around?
Well, we are just minutes away from the final set of votes being counted, and then we'll get a result. So we're not too far away from knowing whether the workers have decided to back this deal the fourth time round or they'll extend their strike here. So clearly, given how narrow the vote was in defeat previously, the markets had expected, and we've seen that in the share price, that Boeing was likely to see this vote be passed given the incremental improvements on the contract. 38% increase in wages over 4 years and that $12,000 signing bonus. So, if this doesn't go through, it would be a big shock to the markets. But given where Boeing is at right now and with the presidential election happening, clearly the union has warned, the leadership has warned, if you do not get this deal passed, this deal may not be as good as the next round.
I mean, it just feels as though the more iterations there are of this, the more the unions are able to extract from Boeing. Is there a sense that this may be the last chance for them to reach a deal, or is there going to be perhaps another attempt after this as well? When do we get to a final position where it's almost an from Boeing to the workers?
See, that is the million-dollar question, right? We'll be talking about this in another week or so from now. So given the presidential election and potentially a change in leadership, this is something that the union has warned about. Take this deal now or it'll be worse off. But we've seen over the summer and over this year how US unions have been pushing for substantial pay raises because of the cost of living pressures and the lack of acceptable deals in the past. So this is just what we see today with Boeing is a continuation of this kind of push for better pay and better rights.
Bloomberg's transfer reporter Danny Lee, always great to chat to you on a story that doesn't seem to end, but I'm sure we'll bring you the latest once we do get those final results of the votes that are coming through from Boeing. Now, coming up, ratings agency Fitch signals a possible upgrade for South Africa. We discuss the reasons why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Abu Dhabi today. Well, we're going to talk about South Africa now. Ratings agency Fitch has signaled it may upgrade the nation's credit outlook if the government sticks to its plan to stabilize debt. Fitch's outlook for South Africa is stable, with the rating currently at BB-. So for more, my co-anchor and our chief Africa correspondent, Jennifer Zabasaja, joins us from Cape Town. Jen, good to have you with us and excited that you're going to be joining me for the second hour of the show today. But first, let's talk about South Africa. What exactly are Fitch looking at, and what would an upgrade mean for the country at this point?
Right. Good morning to you, Jumana, from Cape Town. Listen, this could be very positive news for South Africa, and this is just coming a few days after we did get that medium-term budget that was here just a few days ago. And now the important thing to look at, and what Fitch is really looking at, is the revised projections that we did get from the National Treasury. They are expecting slightly some gaps coming in because of revenue shortfalls that they're having, but they are expecting to see a bit of a boost in terms of the budget growing. So they revised upwards to 1.8% over the next 3 years from 1.6% projected earlier in February. And the important thing to note is that that projection was before we had the election here in South Africa. Since then, of course, as we've been talking about, we've seen the government of national unity come together. They've tried to coalesce around a number of the issues that have been hobbling this economy. Namely, of course, there have been the power cuts that were a detriment to the economy for years. There was corruption. There was also infrastructure issues that were really holding back the economy. And so now what Fitch is saying is if the government, if this new GNU is able to stick to a lot of the promises that they have made, potentially then they could get a better upgrade. And this could be significant for South Africa, especially if we look at the past decade that we had seen here in the economy economy. I mean, corruption, a number of the issues that I was speaking about led to the economy just not growing in the way that it should be, and also leading to a lot of downside for equities, also for the rand. And so potentially, if we do see this continuing, if we do see ratings agencies like Fitch and others continue to be bullish, potentially then we see even more green shoots and upside for the benchmark stock index, the Johannesburg Stock Exchange, for equities across the board. Potentially then we see more foreign direct investment. The rand could also see some upside as well, bonds. And so it is cautiously optimistic, I think, is the tone that we are getting from Fitch, because really a lot of people and even investors that I speak to are saying, yes, what we're looking at right now is looking promising, but what is going to be key is sticking to a lot of the projections and the promises that have been made.
Yeah, it definitely could be a major catalyst for the South African economy. Bloomberg's chief Africa correspondent Jennifer Sabazaja, we will catch up with you in 11 minutes. Looking forward to it. All right, moving on. We are going to be talking about Aramco next, so stay with us. We'll be right back. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Abu Dhabi. The world's biggest oil producer is widely expected to report a drop in third quarter profit later today. Saudi Aramco lowered its oil production more than a year ago in line with OPEC plus cuts. Its shares have dropped almost 17% so far this year. So for more on this, Bloomberg's Farah Al-Bahrawi joins us now. Farah leads our equity markets team for Europe, Middle East and Africa. Great to have you with us on the show. It's obviously a big earnings week for Saudi Arabia with several of the big names reporting. Just give us a sense for what we could or should be watching out for as far as Aramco is concerned.
Absolutely. Good morning, Jumana. It is a big earnings week in Saudi Arabia, but Aramco is going to be our focus here. Like you just said, it's analysts widely expected to report a drop in third quarter profit from a year ago due to those production cuts. Margins are also expected to be under pressure due to the volatile crude prices. We saw crude coming in under pressure in the third quarter due to the geopolitical issues ongoing in the region, due to weak macro indicators. So that's expected to have weighed on Aramco's earnings. The key thing for Aramco, as always, is the dividend story. Management could continue to extend that into 2025, those extra payouts, but what Bloomberg Intelligence is expecting here is that Aramco might actually shift into a net debt from a net cash position as its dividends go higher than their free cash flow. So that's one that we're going to be monitoring as well. The stock is down about 17% so far this year, making it the worst among the top 10, top 20 companies globally in terms of share performance. So we'll see whether the earnings and their outlook gives it a boost. Quickly looking at SABIC in Saudi Arabia. In the commodity space, it also missed, well, actually just missed profit estimates yesterday. The shares were down just a little bit, but the chemical sector as a whole is suffering from costs, from weaker demand. We've seen BASF in Germany also give a cautious outlook. So the chemical sector continues to be one of interest for us in Saudi Arabia.
Yeah, and Farah, just quickly, the demand for IPOs in the region continues to be quite solid. Just tell us a bit more about how the year has shaped up so far and what the pipeline looks like for the rest of the year.
Yes, it's still pretty strong, Jumana, to be honest with you. We've seen Lulu coming yesterday, actually boosting its IPO to selling 30% of shares from 25% due to high demand locally and globally. The company is set to price at the top end of the range and seeking to raise as much as $1.72 billion at this point. We are also expecting Saudi Financial Services firm United International Holding to come in. It's seeking to raise 246. Again, it's the demand had sold out. I mean, the books had sold out within hours of opening. Again, very strong demand there. And the question here is, what happens on the first day of trading. And OQ, exploration and production, we've actually seen the shares drop, which is a rarity in the Middle East on the first day of trading. OQ is still looking to sell some of its methanol unit to the market. So how the market receives it on the first day of trading is going to be key.
Yeah, absolutely. Bloomberg's Farah Al-Bahrawi leading our equity markets team for Europe, Middle East, and Africa on some of the drivers for some of these local markets, including Aramco. Well, we just got some breaking news. We were just previewing what to expect out of Boeing with our transport reporter, Danny Lee. Well, here it is. Boeing workers have accepted the latest contract offer ending the strike. So it has finally happened. Boeing union's vote ends the 53-day labor strike. So there's been a strike going on for 53 days now, which has been obviously dragging on Boeing financials. They have accepted the offer. The strike is now over. So good news for Boeing. Definitely an issue that has been hanging over the stock, but it seems they have finally reached a resolution on the terms of this pay deal with those workers who had been on strike. So this has just come through. There is an agreement with the workers and Boeing's. All right, well, that's it for the first hour of Horizons Middle East and Africa. I'm Jumana Bersachi in Abu Dhabi, but stay with us for the second hour. There's plenty more to come here from Adipec, and then also we're live in Cape Town as well with Jennifer Zabazaja. We'll be right back. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. It is the final countdown. Donald Trump and Kamala Harris are in Pennsylvania on the last day of campaigning for a presidential election that is on track to be one of the closest ever. Asian stocks climb on positive China sentiment, but U.S. futures are flat ahead of Election Day. And Boeing machinists accept the contract offer, ending their 7-week strike that shut down production of most of Boeing passenger planes. Well, good morning, everybody. It is just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Abu Dhabi.
And I'm Jennifer Zabasaja in Cape Town, where it is just gone 7 a.m. Good morning, Jumana. How are you doing over there?
Yeah, good, Jen. It's great to have you with us on this second hour of the show. And I was just thinking to myself, I am at Adipec, which is in Abu Dhabi, obviously, and one of the largest energy conferences in the world. You're also at an energy conference today for Africa Energy Week. And it's interesting because a year ago, one of the big themes at Adipec was this concept of the energy trilemma, which is how do you achieve sustainable energy, affordable energy, but then also energy that is accessible to all parts of the world. And I know that this is a major theme in Africa as well, the energy deficit. I was on a panel last week at FII simply talking about how much energy poverty there is and what can be done to help improve the energy situation in Africa. So I'm guessing that's going to be one of the big themes of where you are right now.
Absolutely, Jumana. I mean, Africa Energy Week, similar but slightly different to what you're talking about here. It is a lot of those themes that they're talking about here. It convenes a number of stakeholders from across the African continent, because we do have to remember there are a number of African nations that are getting into this energy conversation or have been in it, whether that's a part of OPEC or elsewhere, and are really going to be dependent for a number of other developed countries across the world. But also the other theme that I would just add to what you were saying is also reliant, because yes, it needs to be accessible, but it also needs to be reliable for a number of people. I am sitting in South Africa where for years, it was a struggle to have reliable electricity and energy. And that's just not specific to South Africa. That has happened across the whole entire continent. And so later today, I'm actually going to be speaking to a number of ministers who are focused on this, not just making sure that it is accessible and reliant for communities, but also that Africa can really start to be a major player in this discussion around the future of energy and sustainability and security for the global world.
Yeah, interesting to see that the OPEC Secretary General is going to be there. He was here at Adipec yesterday, so busy schedule. Jen, thank you so much. Let's quickly check in on markets. It is a big day for markets, but it is the calm before the storm. Markets are not doing that much, if I'm honest. U.S. futures are trading sideways after a bit of a dip yesterday. 10-year yields sitting at 4.30, so still stabilizing at much higher levels than they were a couple of weeks ago. USD also trading flat, though we saw a bit of a dip for the greenback yesterday after that poll emerged showing Harris has a slight advantage also over some of the key swing states, including that surprising poll in Iowa. And then Brent stabilizing this morning. We are slightly firmer, about 0.1% firmer. But of course, geopolitical considerations are being factored in addition to OPEC Plus decision to postpone the putting back of barrels to the market by 1 month. Our terminal chart today also in focus because this is demonstrating the public's perception of which U.S. political party has a better handle on the U.S. economy. And you can see from this, the red line, i.e. Republicans, has inched ahead of the blue line, which tells you that the U.S. public have more confidence that a Republican president will be better for the U.S. economy than a Democrat president. So that helps some of the framing into the key policies that people are going to be voting on at the elections today. So let's also check in on how markets in Asia are faring. April Hong is in our Singapore studio. April.
Yeah, Jumana, we're seeing Asia stocks led by Japan, or I should say in China, where we're seeing the CSI 300 piling on gains since coming back from the lunch break, adding and 2.3% higher there. It is a story of outperformance from Chinese equities after we got services activity data from a private survey showing improvement. We also had Chinese Premier talking about how he's confident about the Chinese economic recovery, but perhaps more importantly, out of the China MPC, it seems like these top legislators are considering a plan that could help local governments to ease their financial burden. So this is what we're seeing in stocks, but also wanted to highlight what we're seeing in the Aussie dollar. It has been holding fairly steady at about 66 US cents after the RBA left things unchanged. This was as expected, but also from the presser, we're not getting any clues of further guidance from the RBA governor about when we could potentially see a cut. Guys?
Thanks so much to Avril Hong there in Singapore for us. Now let's turn to the U.S. election. Of course, we have been seeing Donald Trump and Kamala Harris sweeping through a number of swing states as the final day of campaigning, of course, wraps up in the U.S. for a presidential election that is on track, as we've been seeing through many of the polls, to be a dead heat. Let's bring in Bloomberg's Vonnie Quinn, who has been following this and is joining us now. So, Vonnie, what were some of the closing messages that we got from the candidates?
Hi guys, well it is officially election day, 6 minutes past midnight here on the East Coast. Both candidates are holding their last rallies right now, and for Kamala Harris's side it's all a message of joy, unity, excitement about what polling day may bring. She's literally right now rallying in Pennsylvania with Oprah Winfrey and with Lady Gaga. For his part, Donald Trump spent most of his day in Pennsylvania. He's finishing up in Grand Rapids, Michigan, another key swing state and a place where he finished up his campaigning in 2016 and in 2020 as well. His message, perhaps a little darker, a little more skeptical. He's already put out the idea that he's perhaps won in advance and that if the numbers don't show that, then perhaps there will have been a little messing, which may augur some legal challenges, but we are expecting them anyway.
Yeah. Vonnie, just a question, because I was just talking through the market reaction. We saw a bit of a dip in the USD yesterday, reflecting the fact that in some of the latest polls, Harris seems to have gained somewhat of an advantage. But maybe just walk us through what the final polls are actually reflecting right now. We know it's close.
It is actually fascinating, Jumana, because we did see Kamala Harris pull ahead in a couple of different states, in particular a couple of key swing states. Now, all of the polls are within a margin of error, but that said, They are absolutely neck and neck in all of the states, in all 50 states, and in particular the 7 swing states that will be key to this election. One particular poll got a lot of attention in the very final day of media attention, if you like, and that was a poll out of Iowa, of all places, which was a very red state, and that had Kamala Harris actually above Donald Trump by 3 percentage points. Now, it's not suggestive of the fact that she will win Iowa. That would be very unlikely, but at the same time, it does show you the direction of travel. And for example, the PBS Mars poll showed the VP beating Donald Trump by 4 percentage points nationally, and that's outside the margin of error. So very definitely some momentum for the Harris campaign just going into the final hours of this campaign.
All right. Vonnie Quinn there, staying up late for us in D.C. Vonnie, thanks so much. We will check in with you later as we watch this very closely. Now let's turn to another top story we are following this morning, and that is Boeing. We have heard that Boeing workers have accepted a contract offer which will end their 7-week strike. Let's bring in Bloomberg's Danny Lee, who has been following the story very closely for us. So, Danny, what exactly does this mean? Give us the latest on this decision.
Well, it's a defining moment. That's what the union president, John Holden, said when he announced that this vote to accept this new contract at the 4th time of asking would be passed by 59% of the membership. Clearly, there's still there's still unhappy people out there who wanted more fundamental changes, but this means Boeing can get back to focusing on, more big strategic things that it needs to clear to, ease the financial burden it is facing. The key things now on the manufacturing side is to be able to ramp up gradually its output again, to be able to get the planes to customers, and obviously for workers to be in the factories as soon as possible. So a big step forward here for Boeing that they've now settled this very crippling dispute.
All right, Bloomberg's transport reporter Danny Lee joining us with the latest there. Danny, thanks so much for your time. Now, coming up, we speak to Bob McNally from Rapidan Energy on what the U.S. election outcome could mean for the energy industry. That is coming up next. This is Bloomberg.
I'm not wanting to tempt fate. Tomorrow, if there is a large-scale conflagration and things spiral out of control, all bets will be off, and the market and the price could, volatility and price could shoot up. I don't see that happening because more oil is coming on the market, and I think even if you look at how people are planning for the medium long term, prices will remain within a specified range.
And that was one of the guests we've been speaking to there at Adipec, Hardeep Singh Puri. He is India's Petroleum and Natural Gas Minister, speaking with Jumana there at Adipec. And as we've been talking about all throughout the show, we are focusing in on energy and how that is playing out across the globe. I am here in South Africa, where we are hosting Africa Energy Week. A number of major stakeholders across the continent are focusing in on what the current energy situation means for African producers, and also what it means for local communities across the continent. I'm going to be speaking with a number of oil and petroleum ministers who are focused on just that. Some of those are those within OPEC plus, and potentially those who are looking to get into the energy space. Namely, I'm talking about a country like Namibia trying to and actually finding ways to become a part of this energy discussion. There's a number of offshore discoveries that have been made in a country like Namibia, really looking to be a major player in this space. Also here in South Africa, we've seen wind and solar be a big part of the discussion and helping to fill in a lot of the gaps that we've been seeing in the energy space here. And so there is a number of factors that we are focused on here in South Africa. But Jumana, I'm going to send it over to you where you're situated with a guest.
Yeah, so many energy discussions going on all around the world. The Africa Energy Week, but of course, Adipec over here in Abu Dhabi. Well, all eyes today are on the U.S. elections, where both candidates have very differing stances. Vice President Kamala Harris leans towards the clean energy transition and has committed to tackling the climate crisis. Meanwhile, former President Donald Trump has adopted the motto drill, baby, drill, promising to cut regulation and make more federal land available for fossil fuel production. So for more on how the election outcome will impact the energy industry, Bob McNally, founder of Rapidan Energy, joins you right now. Great to have you with us on such a pivotal day as well.
Thank you, Jumana.
Do you think we're making too much out of the two candidates' respective stances for the oil industry, or will it really matter who is the next president?
Jumana, it's great to be with you. It matters in at least three ways. One, Iran. I believe Donald Trump will reimpose maximum economic pressure on Iran. That means sanctions. That means pressure on that 1.5 to 1.8 million barrels a day of exports, number one. Number two, the big issue, LNG export ban. Donald Trump will get rid of it day one. I believe Kamala Harris will keep that thing in place, more or less. I think it'll be very difficult to permit another LNG export facility under a Harris administration. Number three, IRA subsidies for clean energy that you mentioned. So Kamala Harris will be playing defense. She will be defending those from the budget cut, from being struck by Congress and so forth. But remember, we don't want to make too much of it. Kamala Harris, if she wins, will be constrained by a very likely Republican Senate and a Supreme Court that's become very conservative and has sort of dismantled a lot of laws. So I wouldn't make too much of it, but there are some important consequences.
So when you talk about the reimposition or better imposition of sanctions, more effective imposition of sanctions, not just on Iran, but also Venezuela, Russia as well. I mean, there are, in theory, sanctions applied on all of those oil-producing countries. If they start getting exercised more effectively, does that mean necessarily upside for the price of oil?
It does, because it will remove supply, and also in the case of Iran, it risks a backlash from Iran in that region. Remember, in 2019, Iran was hitting tankers and hitting Adipec and Kuwait and other facilities in this region. So it is an upside risk. Now, Donald Trump told his team in the first administration, go after Iran, but don't make oil prices go up. So I think if the oil market is tight, if it's firm, if we're at $80 or $90 a barrel, I think President Trump might be reluctant to go heavy on those oil sanctions. But, the buzz is that the markets are softer.
Right.
In some ways, it could be just what the doctor ordered in terms of removal of supply.
Yeah. So here's the thing, right? You talk about supply, and the supply situation today is the U.S. is producing a lot more barrels than it did even 8 years ago, the first Trump presidency. 13.5 million barrels a day. How much further can they actually go? Is it going to change under this drill, baby, drill motto?
Jumana, you put your finger on a point that is underappreciated. In the last month or two, we've seen major agencies and forecasters, Rapidan included, significantly upgrade the outlook for U.S. crude production, also Canada and Brazil. The U.S. is at 13.4 million barrels a day crude. It can go higher, and I think it will. Brazil and Canada as well. This is a problem for OPEC Plus. Even like me, if you doubt that demand's going to peak by the end of the decade, I don't buy that at all. However, OPEC Plus has a problem. If we see non-OPEC Plus supply in the 1.5 million barrel a day range, and demand is, let's say, closer to 1, that is a protracted surplus problem that OPEC Plus will have to manage. And that is something that once we lift our gaze from the election and Iran, Israel, and we look a little bit into the future, that's staring at us.
Are OPEC Plus ever going to be able to put those barrels back to market without causing a massive decrease in the price of oil?
Well, OPEC Plus will have a decision to make. If they decide to sweat the high-cost producers, and for that matter, some of the overproducers inside, like Iraq, the oil price will collapse. We saw that in 2014 and 2015. We saw that in 2020. That is, in a way, if you look at history of the oil market, that's the one tool that is successful at slowing excessive non-OPEC supply growth and disciplining cheaters. It's a tool they'd prefer not to use, but sometimes you're forced into this by this brutal global oil math.
Yeah, and then if that does happen, then you could see also a slowdown in shale production simply because it's a reflection of where
shale would be the first casualty.
Yeah. So let me just go back to something that you said about you're skeptical about peak oil demand. I was also just speaking to Dan Yergin earlier on, and there are many differing views out there. OPEC think that we're going to hit peak oil demand, well, not going to hit it before 2050. IEA see that happening around 2030. But then the question is, what happens once we reach peak oil demand? Does the situation sort of plateau, or do we start steeply declining afterwards? Ultimately, though, with all of these industries that are demanding energy and energy sources, from AI to data centers to the electrification of the economy, there will be a huge need for energy and energy sources available. What do you see as the ultimate energy mix that the world is heading towards? And are hydrocarbons still going to be a substantial part of that mix?
I think hydrocarbons are still going to remain holding the lion's share of the global energy mix, about 80% now, and it's going to be around 80% in the next coming decades. It was fashionable for a period of about 2015, the Paris Agreement, until the Russian invasion of Ukraine, to believe and to forecast we would quickly reduce fossil fuels. But you know, interest rates were low then. They're high now. There were no major wars then. There are major wars now. Oil prices were low then. They are high now. And China was accepted as the clean energy supplier, both power and transportation, no longer in Europe, the United States, or anywhere else. So the underpinnings of this fashionable wishful thinking in peak demand have been knocked down. And I think you're starting to see among investors and companies that embrace the transition, like BP and Shell and major investment companies, they're beginning to gravitate back from a sort of keep it in the ground, rapid decarbonization to a more pragmatic, paced decarbonization, in which I think fossil fuels will have the lion's share. And we'll have to learn how to decarbonize fossil fuels. A big thing here at Adipec in the UAE. Carbon capture sequestration, hydrogen, and so forth. It's more like live with fossil fuels, don't destroy them, and think you can still have an economy and national security. I have a sense that's the way folks are shifting, regardless of what the IEA says.
Yeah, okay, so let me just ask you one final question about China and China's strategy, because China took a decision about 10, 15 years ago that they wanted to go all in.
That's right.
On the transition, which has meant that they developed a relative advantage, competitive advantage in the refining of some of these critical materials, the resources that are needed for the transition. Do you think you fast forward to today and China are in a better position than any other economy around the world vis-a-vis obtaining and having access to the critical resources and minerals that will drive the transition in the future? Are they ahead of everyone else?
They are ahead of everybody, but they are behind in their big strategy. Here's why. As you said, around 2009, 2010, Beijing said, build it and they will come. We will dominate the clean energy supply lines for power and transportation. But the premise was that Europe and the United States would allow them to do so. And to my point, if you look at what's happening in Europe, you look what's happening in the UK, in Canada, and the United States, even President Biden kept many of Donald Trump's tariffs and so forth. There is now a consensus that we will not allow China to be the dominant supplier of clean energy. Even pro-climate change officials would prefer a slower decarbonization than one that is made in China.
Yeah. Bob, that's a great place to leave it. Thank you so much for sharing your thoughts. And also, we've got a fly who joined us in this conversation.
All are welcome here.
There were three of us in this interview. Bob McNally, the founder of Rapidan Energy. Thank you so much. All right, also coming up, Morgan Stanley Chief U.S. Equity Strategist Mike Wilson shares his views on how the U.S. election will likely impact the stock markets. This is Bloomberg.
Good morning and welcome to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town for you this morning. Here's a look at some other stories we are following throughout the day. First off, Beijing has filed a complaint with the WTO over the EU's tariffs on Chinese electric vehicle imports, accusing the bloc of protectionism. The formal complaint raises the risk of greater tit-for-tat confrontation in a trade relationship worth more than $800 billion last year. The two sides are still talking, with the EU sending officials to Beijing to discuss a possible agreement on pricing. And we have plenty more coming up. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. It is the final countdown. Donald Trump and Kamala Harris are in Pennsylvania for the last few hours before polls open in a presidential election that's on track to be one of the closest ever. Boeing workers accept the contract offer ending their 7-week strike that shut down production of most Boeing passenger planes. And the world's biggest oil producer, Aramco, is set to report a drop in third quarter profit later today. It is just gone 7:30 a.m. here in South Africa, where I am. I am Jennifer Zabasaja in Cape Town.
And I'm Jumana Versace in Abu Dhabi at Adipec today, where it's just gone 9:30 a.m. Welcome again to our show. And if you are just catching up with us right now, both Jen and I are at energy conferences today. I'm at Adipec over here in Abu Dhabi. Jen is at an energy conference in Africa, but I think discussing similar themes. Over here, a lot of the talk has been about not just AI and the energy demands that we're going to see coming from data centers, but also access to energy security, and then of course, as we head into COP next week, still talk about sustainability. But there seems to be this overarching theme here that even though there has been increased amount of attention on sustainability the last few years, hydrocarbons and fossil fuels will continue to be part of the solution. But of course, the industry leaders here will say that, would be saying that, Jen.
Yeah, of course, Jumana. And from where I'm sitting, I'm about to go and participate in Africa Energy Week. And that is key to the discussion, right? Especially when we talk about the energy transition. A lot of African stakeholders within the energy sector are saying that this still needs to be a part of the discussion, especially as many parts of the continent are still trying to get sustainable and reliant energy for their own communities, but also be a part of the global conversation when it comes to being producers and exporters. And so it's going to be really fascinating to hear from their perspective how they're planning to address some of the challenges and the shortfalls that they have seen over the past few decades, and also then be a part of what is increasingly becoming demand potentially from other parts of the world, while at the same time dealing with, as you know, a lot of the supply concerns that have been part of the discussion, especially when it comes to America producing more as well. Jumana?
Yeah. Well, you said America, and it is a big day in America. It is officially Election Day. If you adjust for the time zone difference, we're now officially November the 5th in the U.S., so we can actually call it U.S. Election Day. This is how markets are faring heading into this all-important day in the U.S. And I've got to tell you, they're not doing a whole lot. U.S. futures are leaning towards the green after a slightly worse close yesterday for Wall Street. 10-year yield still inching higher, 4.30 is where we're at. USD unchanged today, saw a bit of a dip yesterday, and then Brent stabilizing around $75. The terminal chart that we've been looking at has been the public's perception of which party is better for the economy. And you can see the last 2 years, red has overtaken blue, which means the public have a perception that a Republican president would be better for the U.S. economy. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. And Avril, just give us a sense for how some of these Asian markets are faring into this all-important U.S. election day.
Yeah, let's focus on assets in China, because as I've been talking to you about the past 2 hours, that's really where we're seeing the outperformance, even given what we are expecting from the U.S. election uncertainties. And really, this is the domestic headlines that are coming out of China. You think about the services activity, what the Chinese premier said about confidence in the economic recovery, but perhaps more importantly, how the top legislators in the country are considering a proposal that will essentially allow local governments to kind of shift some of their off-balance sheet debt to their official accounts. And this is a way that would help them to ease their financial burdens, free up spending on some of these employee salaries, construction projects as well. So something that would be stimulative for the Chinese economy. But this is what we're seeing on Chinese stocks at the moment. There are some risks to this, though, as we see also potentially, the negative credit ratings action, something that's been flagged by our analysts as well. Guys?
Avril Hong there in Singapore for us. Avril, thanks so much for that. Listen, let's bring you some other stories that we're following. Morgan Stanley's chief U.S. equity strategist says the the U.S. election could present a market clearing opportunity. Mike Wilson told us what he sees as the top concerns for traders ahead of the landmark vote. Take a listen.
The general trend in labor is down. We're in a late cycle economy. So the equity market is worried about growth slowing, and that's why the Fed's cutting interest rates. Okay. So the bond market can't, the market goes up because growth is better and people believe that, then it could be okay for equities. If bond market yields go up because term premium is widening, because of fiscal sustainability issues, then it's a problem.
Well, I guess the reason why I ask this is because the Trump trade is, the knee-jerk reaction supposedly is bond yields go up and equities rip, particularly in the more cyclical sectors. I'm thinking of financials. Based on the idea that you're not necessarily getting some sort of economic impulse that's immediately overlaid onto this scenario, why should risk assets continue to rally if yields continue to surge simply on this idea that the deficit's increasing and that bond vigilantes suddenly could be back?
Well, first of all, the financials is a little bit different because that's a dereg sort of call, and I do think that one's fairly visible. I think if you have a Trump presidency and maybe even a red sweep, you could get more lenient regulatory environment. Maybe M&A picks up. That's kind of the financials trade, but that's unique. And we don't think the financials have really rallied that much on that trade yet. It's been more about the third quarter earnings season and the fact that we went into that earnings season with not a lot of high expectations. So I think there's scope for further follow through in certain quote unquote Trump trades. At the same time, there's probably the other side, which is that I think a lot of the negative trades have played out for the Trump trades. Bonds have sold off probably too much. And the renewables and things like consumer goods companies that will be hurt by tariffs have really been hammered. So if Harris wins, you could see a pretty big rebound in some markets. So there's a lot of permutations here. It's not as clear cut. I think you said it exactly right. It's all about the setup. Okay, stocks and asset prices move based on positioning as much as they do about the actual news. I'm looking for a clearing event. Okay, I'm hoping this is a clearing event, and then we can kind of get back to doing what we get paid to do, which is analyze interest rates, earnings growth, and kind of multiples, trying to figure out, okay, what's the fundamental case here? And my guess is that could take maybe a month to kind of clear.
That was Morgan Stanley's chief U.S. equity strategist, Mike Wilson, there speaking to Bloomberg Surveillance. Let's pivot back to the region, though, and bring you some news from Zimbabwe. Zimbabwe's gold-backed currency has posted its first gain in more than 2 weeks, which a country's central bank is attributing to its tighter monetary policy. Let's bring in Bloomberg's Andira Oganga, who has been following this story for us. So, Andira, walk us through the story. What can we actually attribute this momentum to?
Jen, you mentioned it quite briefly in the intro. It all boils down to the central bank. On the 27th of September, we saw them devalue their currency, the ZiG, by 43%, and it went from trading at about 14 to the dollar to 24.4. Simultaneously, we also saw them hike their rate from about 20 basis points to 35 basis points. One, to remove the volatility from the currency, and also to tame runaway inflation that went from about 5.8% to 32.7%, mainly because of the deterioration of their currency. And now, almost a month later, a member of the Monetary Policy Committee tells Bloomberg that the natural expectation was for the ZiG to firm up, and that's exactly what we're seeing. This firm up is of about 2.4%, and the ZiG is trading at about 27.99 in the official market, and in the parallel market is about 35 to 40, which is an improvement from the 40 to 50 that it was trading at previously. And we are also seeing that the government is really, really hell-bent on ensuring that this currency works, because it's their sixth attempt in 15 years at having a stable currency. We're expecting the Ministry of Finance to announce a couple of measures to increase demand of this currency, one of them being requiring payment of utilities with ZiG, payment of duties, and also local council payments. They say that if there's demand for the ZiG, then the monetary policy interventions that they've put in place will work in a complementary manner to stabilize the currency.
Fascinating. As you say, there have been so many attempts from Zimbabwe the last few years to stabilize the currency. Andira, I'm going to ask you a bigger picture question because one of the major topics that we've been discussing here at Adipec is obviously some of those long-term energy themes, but then also how U.S. elections may impact the direction of travel for energy markets. And I just wonder whether similar conversations are being had. Definitely many world leaders are paying close attention to what happens with these U.S. elections. But what is the feeling from the African continent of how things could change and the relationship with the United States could change post-elections?
Jumana, African leaders are closely following this election because if we just try and profile the various candidates that are vying, if we start with former President Donald Trump, he said time and time again that tariffs are a really beautiful word, and he's for the protectionist trade policy. We are likely to see import tariffs affecting certain countries and regions like Asia and countries like China. Now, if you look at China, they're Africa's biggest lending partner and also trading partner. So if they sneeze, Africa is definitely likely to catch a cold. And then there's also the Africa Growth and Opportunities Act, which is known as the AGOA, that needs to be reauthorized next year. And this could be at risk if President Donald Trump comes into power. You look at a country like South Africa has really good trade relations with the U.S. And so South African goods in the U.S. could also be at risk. If we look at Vice President Harris, she's thought to be more friendly to the African continent. Her strategy is perceived to potentially bring more investment to the African continent. She could visit, she's previously visited as Vice President, went to Zambia, went to Ghana, went to Tanzania. And yesterday, when polls were showing that there's a less likelihood of a Trump victory, we saw the South African rand rally by 0.8% to trade at 17.51, which is the best level it has traded in over a week.
Andiro, yep, it's going to be a very close election, and I think all leaders around the world, everybody around the world is keeping a close eye on what happens. All right, just in the last couple of minutes, I want to bring you some breaking news that we got from Aramco. We were previewing this in the prior hour, the importance of these earnings results that have just come through. But just to give you some of the key numbers here, a small miss versus expectations. Third quarter net income, 97.62 billion reals. The estimate was 99.74 billion reals. So it is coming in slightly lower than what the market had penciled in there. The dividends, always a focus for Aramco. $31 billion. They're keeping it as is. And remember, that is one of the big draws for investors, as we've spoken about. They have one of the highest dividend yields amongst the oil majors. So Aramco dividend maintained at $31 billion. In terms of free cash flow, up 8%, so up to 22 billion for the third quarter. And then the performance-linked dividend is also coming in at $10.8 billion as well. So just to give you the third quarter net income figure, 97.62 billion reals versus estimates of 99.74. All right, coming up, our interview with pioneering biotech firm CEO Jennifer Holmgren about transforming captured carbon into new products like sustainable jet fuel. That is coming next, and this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Abu Dhabi today. Well, a key focus here at Adipec is commercializing and scaling new research and technologies to power the energy transition and a more sustainable future. Now, one company at the forefront of creating a circular carbon economy is Illinois-based LanzaTech, which uses cutting-edge technology to transform waste carbon into other products as well. So I'm really happy to say that the CEO of LanzaTech, Jennifer Holmgren, joins you right now. Before we get into the products that your company manufacturers, let me just ask you about how you feel the atmosphere is this year at Adipec. I feel as though 1 year ago there was perhaps a lot more focus on sustainability. This year there is a lot more focus on future drivers of energy demand, and therefore a feeling that hydrocarbons will continue to be part of the solution somehow.
I think you're absolutely right. We're seeing more and more discussion about things like AI, which are power users. And so the question is become more, how do we supply what we need versus how do we reduce carbon intensity? However, underlying it all, there's still a carbon discussion.
Yeah. So let's talk about what LanzaTech does. It's a fascinating technology because, from what I understand, you produce low-carbon ethanol, but taking waste feedstocks to get that low-carbon ethanol. So first of all, just talk us through what the market size is for this process and also how scalable it actually is.
Absolutely. So we believe we have over a $2 trillion market because we're using these waste feedstocks these emissions to make fuels, chemicals, and even protein for food. And so these are massive, massive markets because we've tackled the big commodities that all come from fresh fossil carbon. So it's a massive opportunity. The other great thing about the technology is that it solves two problems at once. Problem number one is the emissions. We're reducing the emissions. And two, we're making a usable product.
Yeah.
Every time we do that, we don't need to take another molecule out of the ground.
Yeah. What is the price premium for customers looking to buy your product?
It depends. If you are making a polyester, your price premium is probably on the order of 50 to 70%. If you're making sustainable aviation fuel, it could be as much as 2 times the price of conventional fossil.
But doesn't that impede scalability, right? And when people talk about scaling up some of these technologies, it has to be at a price point that is accessible. How do you bring the cost down?
You bring the cost down by building more plants. We're very fortunate that we work with early adopters. IAG, British Airways, right? They're an early adopter of our technology. And so what that does is it pulls the market. If you build the first ones, the next one will be cheaper. It's kind of like Tesla built that Roadster that nobody could afford, but that got them to the sedan.
Yeah. What are the industries that are most interested right now in your product?
I think the materials transition and sustainable aviation fuel are the two big ones. Everybody's starting to realize that everything we wear, everything we sit on is a fossil, you know, and so people are very interested there. But in all honesty, I think the biggest market right now is sustainable aviation fuel.
Yeah.
That's what is key.
So if I understand this correctly, you actually spun off one of your businesses, the LanzaJet, which produces sustainable aviation fuel. So what is your plan looking ahead to commercialize that side of the business?
Actually, we have a plant that's just coming up right now that will produce 10 million gallons of sustainable aviation fuel. Should be up and running in the next few months. And so that's the first step. We license our technology globally, so that means we're working with partners that are adopting the technology. Jet Zero in Australia, Air New Zealand. So we're now designing plants pretty much all over the world.
What is the outlook for the airlines industry and take-up for sustainable aviation fuel?
I think the adoption has been slower than they expected. We've been talking sustainable aviation fuel for almost 15 years, but you're starting to see more and more production capacity come on stream versus just talking about production. You're actually starting to see the gallons come off.
Yeah. So it's moving in the right direction, but we're not quite where we need to be.
Correct.
I'm going to leave it there. Jennifer, thank you so much for joining us on Bloomberg today. Jennifer Holmgren, the CEO of LanzaTech, talking us through the technologies that they have been introducing to the world and some of the promises of these Adnoc products. Well, coming up, oil giant Saudi Aramco has missed its profit estimate in the third quarter. We are live in Riyadh with the latest next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. Well, we just got results from the world's biggest oil producer, Saudi Aramco, just a few minutes ago, reported their third quarter results, missing their net income estimate. For more, let's go to our Saudi bureau chief, Christine Burke, who is standing by for us. So, Christine, give us some of the headlines.
Well, as you mentioned, we got the results just moments ago for the third quarter. And when we look at it, as you mentioned, we have a miss on that bottom line figure, of course, the company's profitability. But not only did profit miss estimates, it was also the worst quarterly profit that we have seen since 2021. That shouldn't come as all that much of a surprise, considering that Aramco is pumping the lowest levels of oil production since 2021. Of course, oil output is around 9 million barrels a day under that OPEC plus supply policy program. And at the same time, we had a big drop for Brent of about 17% during the third quarter. So not only is Aramco cutting production, but it is then selling that oil into a market that is weaker in terms of prices. The other thing that I think is a bit interesting coming out of this report is free cash flow. Free cash flow had been coming down in the last 3 quarters, but we actually saw that it tipped a bit higher in the third quarter. Free cash flow had been watched very closely as it was deteriorating as the company tries to keep elevated dividends. Keeping that dividend payout was really eating into those free cash flow numbers. And then, of course, the other big thing, which everyone is always looking at when it comes to Aramco, is the dividend payout. As expected, the company said it will go ahead with paying its planned dividend of $31 billion for the third quarter.
Christine, I actually do want to pick up more on that dividend number because it did stay at around $31 billion. It's always been a draw for investors, as we've spoken about, very high dividend yields offered by Aramco. What does it tell us that they keep maintaining this dividend payout at such a high level?
Well, I think you have to remember, Jumana, that Aramco is critical in lining the pockets of the Saudi government. The Saudi government is the largest shareholder of Aramco with a stake of about 86%. So these dividends are critical to funding the government. And we know that the government is in financial strain at the moment. Just yesterday, we got data showing that the Saudi government posted an 8th consecutive quarter of budget deficits. At the same time, we're seeing huge spending and investment needs locally as the kingdom tries to drive forward its economic diversification agenda. So I think really it goes down to the fact that the Saudi government is in need of those dividends, and Aramco is the one to fund it.
All right, our Saudi bureau chief there, Christine Burke in Riyadh for us. Christine, thanks so much for that update. And look, Jumana, it's really fascinating that we got these Saudi Aramco numbers on the same day that you're in Adipec. I am here in Cape Town for Africa Energy Week. And there's a lot of themes that we're paying close attention to when it comes to energy. And when we just look at what we're seeing in a lot of the price action of crude, I mean, a number of these producers have various focus areas that they need to be thinking about. For a lot of the stakeholders who are here at Africa Energy Week, it is not just about being a producer and an exporter, but they're also very focused on how can they also provide provide reliable energy for their own communities here. What about you, Jumana?
Yeah, I think energy security is a big theme. And as we've been highlighting, another big theme is the future marginal sources of demand for energy. And one of those new sources of demand is AI and the electricity that data centers are going to require. So that's something to bear in mind as well. But then also more short term, people talking about geopolitics and U.S. elections. So all of that happening here on the sidelines of these energy conferences, major themes as we think about the outlook from here onwards.
Yeah, you mentioned the U.S. elections. Of course, markets are paying close attention to that because it is officially U.S. election day. We're going to be paying attention to that all throughout Bloomberg Television. Daybreak Europe is next. Stick with us. This is Bloomberg.